If your SMC trades have been failing lately, it's probably not your strategy, it's not your model, it's because you lack the patience or awareness of understanding when you're supposed to trade and when you are supposed to sit on your hands and wait for the setup. So in this video, you and I together are going to solve this problem. We're going to have a fix for it. By the end of this video, you're going to know exactly when you should be trading and when you should be standing aside. So if you're new here, my name is Justin Bennett, Forex trader since 2007, full-time since 2011. As always, all of this is my opinion only and not financial advice. So GBPUSD 1 hour time frame, this is the chart that we're going to go through today. Okay. So the very first thing that I want to point out, and I want to jump right into the content, is that whenever you get a break of structure or change of character on the chart, this is the time that you do not want to be trading. Okay. There is no setup here as soon as we get a BOS or change of character. Now, I also want to point out that these two BOSs that you see back here, I've talked about this in previous videos, but this right here was mostly internal within this price leg. Okay. However, at the same time, that doesn't mean that this breakdown here of this low wasn't significant, because it in fact was, and there was actually a short opportunity from this, which I'll show you later in the video. Okay, but the very first thing to understand is that when you get a confirmed BOS here, okay, or BOS here on this candle and a change of character, this right here, when you get these, this is not the time to be trading. This is not when we want to engage in the market. This is simply providing us clues or confirmation of who is in control. Okay, so that's the very first thing to understand, is that the actual close beyond these levels, okay, this is not the time to trade. This is a time to watch, mark up your charts, and sit and wait for a setup. Now, the second clue that it's time to wait too is that over here, you'll notice that we got the close below this low back here, giving us that confirmed change of character. Now, the moment that we get this, what I like to do is, again, I'm on the 1 hour time frame, but I will switch between time frames and take a look at the candles here that we have on the buy side, because what this is going to do is give you clues in terms of where resting liquidity could be sitting. Now, remember, this is a 4 hour time frame, so even though we don't have a close here on the 1 hour time frame, we do have that close below these lows over here, giving us a confirmed change of character. So on the 4 hour time frame, what you're going to notice here is that we have this candle right here. So basically from this high right here, or rather this low right here, down here to this high, what you'll notice is that there is this pocket between the two. Now, this right here is a fair value gap. Now, the key with this though, or a little trick here, is that on the higher time frames, what I found is on the 4 hour time frame, the daily time frame, even the weekly time frame, what you will often notice or see is that the market will fully mitigate these areas or fully retest them. So what that means is that oftentimes you don't just get a move into the middle of this, you oftentimes get a move all the way back here to this very low. Okay, so that's important to understand when you are planning your trades. Okay, so let's just recap this so far. Very, very simple, right? We've had the close below to give us the confirmed change of character. We know that this up here is a fair value gap specifically, okay, specifically on the 4 hour time frame. So we're going to call this a 4 hour FVG. So knowing that we have resting liquidity above this high, knowing that we have this confirmation, okay, below the lows over here, this is not the time to trade. We also know that it's not the time to trade because we have resting liquidity up here that we want to see tapped, okay? We want to see that mitigated. So what we can gather from this is that basically everything from this point right here where we are currently all the way up here to this area, this is our no trade zone. Okay, we're not looking to trade in here. We are not looking to engage in the market. All we're doing is identifying the clues in the market, right? The market telling us that story, and it's our job to identify when it's time to stand aside and when it's time to trade. So the number one reason, guys, that your SMC trades fail, and again, it could be your strategy, it might be your model, but in most cases, in my experience, it's because we're trading at the wrong moments. Okay, so if I play this forward, you're going to notice that we get very choppy through here. Okay, and this right here is exactly where traders go wrong. This price action, okay, this sideways price action, traders are getting chopped up through here. But again, if you notice that this right here was our close below, we know that it's not time to trade, and it could take some time before we trade, knowing that we have this imbalance up here in this area. Okay, now what you're also going to notice here is that if we drop down to a 15-minute time frame, what you're going to notice is that once we tap this area, okay, remember this was our 4 hour fair value gap. And also too, what I want to point out, remember how I said that a lot of times on the 4 hour time frame, you see a full mitigation. So this low right here, okay, look at the high right here, right into the bottom of this candle. So this is exactly the kind of stuff that I teach in the free SMC course, which actually walks you through exactly how I trade full time every single week. So if you do want to gain access to that, there will be a link here on the screen. click on that. It's 100% free. It's going to show you exactly how I trade SMC every single week full time and how I have for years. Okay, so check out that link here on the screen. If you're on desktop, it's probably below this video. If you're on mobile, it's somewhere here on the screen. So be sure to check that out. Okay, so let's jump back here to a 15-minute time frame. And I'm going to walk you through too, just as a little bonus content in this video, what the setup was here. So this right here was our full mitigation of that 4-hour FEG. And what you'll notice here is that we had a BOS above this high. Now, at the same time, as soon as we got that, we also had a close below this low. Remember, this is the 15-minute time frame here. So we had a change of character down here. Now, what do you notice once again? Okay, so this was our fair value gap from before that has been mitigated. And once again, what you'll notice is that from this low down here, this area, okay, this pocket is our fair value gap. So as soon as you have the change of character, you're essentially just waiting for the market to come into this pocket. And then that right there is your short and a stop above the high. Okay. So once again, as soon as you get this right here, this is not the time to trade. As soon as you get this right here, this is not the time to trade. You look back in the market, notice that we have an imbalance through here. This is what you're waiting on. Okay. So short entry through here, stop loss above the highs. Okay. So very, very simple. Every single time, guys, this is the case. So it's that awareness of knowing when to stand aside, when to engage in the market that is going to make you a much better SMC trader. And again, in my experience, this is the number one reason why your SMC trades are failing. It's not because you have the wrong model. It's not because you don't understand the SMC terms. You can understand all the concepts and terms and patterns and everything else in the world. But if you don't have this awareness of when to trade, when not to trade, then your SMC trades are going to fail. Okay, so let's put on our short position now. Again, it was the mitigation of this area here. So if we shorted through here, stop loss above the high. Okay, and the target in this case would be very, very obvious. So it would be these lows down here. Now you could have multiple targets. You could target this one down here as your first target, second target down here. Either way you want to do it, you can see that off of this low down here, it would have been about a 7.5 R, meaning that your reward was 7.5 times your risk. If it was this low down here, it's still over a 5 R, meaning your reward is 5 times your risk. So either way, guys, this was an incredible trade. And it all started again with the change of character back here. We were waiting. We knew that this was the time to not engage. We knew we had a fair value gap up here. Again, not the time to engage. This entire price action, all of this through here, was not the time to trade the market because it was just chopping around. We wanted to see more structure in the form of this up here following the full mitigation of that 4-hour FEG. Okay, so I know I'm going through this quickly, but as you can see, I mean, it's really straightforward stuff and we're doing the exact same thing every single time. But again, and I want to really hit this home in this video, is that the number one reason why your SMC trades are failing is because of the lack of awareness of when to trade, when not to trade. And really, it comes down to this thing that we like to call discipline, right? Which we'll talk about in this video. And I'm going to share some insights with you on that are going to completely change the game for you. And it's not what you think. Discipline is not just a matter of having more discipline. In fact, that's just what we often chase as traders, but we're literally chasing ghosts. And I'm going to explain that fully in this video later on. Okay, so right there, guys, if you were targeting the lows here, again, over a 7R trade, reward 7 times your risk, very fast trade down there toward the lows. Now let's pop back out here to a 1 hour time frame and play this forward. Okay, so we're going to do this all over again. Now this was our low here. Now this up here is our external low. So we have the change of character back here. We have the external high up here. We know that this is now external because off of this low right down here. Okay, so if we snap a level right here to the low, you'll notice that this was our BOS. Okay, so the moment that we get this, what we can do here is just outline from this low down here over here to the BOS, essentially just draw vertical lines right here and right here. Okay, so within this box, what is the highest point? It's this one up here. So that means that this is our external or protected high. In other words, as long as we're below this high, the pound is bearish. Okay, so that's important information to understand. Now, remember what I said before, that we have now a BOS. Okay, so this is the time now. We know that we're not acting. We are not chasing this down here. This is the time to sit on our hands, mark out this BOS, say sellers are still in control. And then immediately what we're doing is we're looking back up here into potential buy side imbalances. Now, I'm going to remove this here so that we can see this a little bit more cleanly. Okay, and you're going to notice right away, where is the imbalance here, right? Where is the liquidity? Where is the resting liquidity in this market? And immediately you should notice this area between this high right here, all the way up here to this low. Okay, so really, really obvious area. Now you could also too, if you go to a 15-minute time frame, you could check this out as well. You've got this low back here as well on the 15. So really you could even draw this a little bit higher up here toward this low, which is exactly what I'm going to do. Now, I mean, keep in mind that these areas are going to vary by time frames, right? But as long as you're capturing the overall essence of where this area is, then you're good to go, because we're not just blindly entering short up here. Okay, all this is doing is telling us that now we have our BOS down here, sellers remain in control. We have this massive area of an imbalance up here, this buy side imbalance that we're now looking for the market to mitigate before we start looking for a short. Okay, and the whole point of this video, the reason I keep talking about this is because this, again, down here is our time to not engage the market. And we also know now, knowing that we have this up here, guess what? All of the price action, if we come back here and mitigate this, all of this is not the time to engage. Now, you might be thinking that's a lot of time to sit on our hands, and you're absolutely right. Trading is mostly patience. It's mostly sitting on the sideline and doing nothing. Even if you're in a trade, you're doing nothing. If you're not in a trade, you're doing nothing. Trading is a lot of sitting and waiting, but that's what makes a good trader. Okay, so let's move back here to the 1 hour time frame, and I'm going to play this forward. And as we do this too, I want to talk through this idea of discipline. Okay, so as traders, we're often told that we need to have discipline. We need more discipline to become a better trader and have more patience. But here's the thing, okay? Here's the kicker with this is that there really is no such thing as more discipline. And if you think about it, that might sound crazy, but stick with me. If you want more discipline in anything in life, think about it. If you want to get in shape, what do? You have a workout routine that you come up with. You have maybe a shopping list. So when you go to the store, you're not just, loading your car with cookies and whatever it might be. You have lists or rules that you have set in place so that you can achieve those things. So the discipline that we like to think about, right? The more discipline that we like to think about, it really comes down to having checklists and rules that we follow. Now, of course, you have to have the willpower to follow those. But in terms of the idea that we need to have more discipline, we're chasing a ghost. So what you need to do here is you need to have rules and a checklist when you're trading in order to have that discipline that we like to think about, right? Because without those, there is no discipline. You have to have the willpower to follow them. But again, there is no discipline without rules and checklists. Okay, so the moral of the story there is that we have to have rules, we have to have checklists when we're trading in order to have that so-called discipline. Okay, so right here, looking at the pound, once again, hourly time frame, this down here, once again, just to recap this, once we had our BOS down here, this is our time not to trade. We're not chasing this lower. We're not doing anything down here. We're not doing anything through here because we know we have this imbalance. Now, the moment that we start tapping into this, now we're interested, right? Now we're looking at potentially a lower time frame shift. Okay, so let's go to a 15-minute time frame and just see what we get. Now, once again, you can see where we have fully mitigated, or at least for the most part mitigated, this imbalance from back here. Okay, so let's play this forward now and see what we get here from the pound. Okay, so right now, just kind of going sideways, chopping around, you can see here that we did have a BOS, okay, so a break above this high right here. So if we count that as our BOS, you can see that this down here would be the low that we're watching. Okay, so any close below here would give us a confirmed change of character following that mitigation and potentially a short setup. Okay, so looking here, we did get a close below. So we can now call this a confirmed change of character on the 15-minute time frame. Okay, now we also had some imbalances up here. If you were trading this, yes, you could get short here with a stop above the highs. And again, we're just following the same rules, okay? This isn't about, forecasting or guessing what might happen next. It's literally just a matter of following the rules, okay? So let's play this forward now. Still in the 15-minute time frame, there you can see some follow through down here toward this imbalance. Notice the displacement that we got from the pound on these few candles through here. So this is exactly what we saw. The pound just come down here and mitigate, okay? So once again, we're in this trade, playing it forward here. And we know that we have non-farm payroll coming up this week as well. And right there, guys, you can see that we would have been stopped out. So if we were looking at this to short through here, okay, again, change of character here, shorting through this area, stop loss above the highs. If you were targeting the lows down here, this would have been a really nice trade. And full disclosure too, guys, I did actually have a short trade on this past week based on price action like this, okay? Now, that was a half size loss for me. I got out for a 0.12% loss. Okay, keep in mind too, though, the previous week I had 3 trades, all 3 winners, and all were over 3R, meaning my reward was 3 times my risk. So I don't care if I lose on a trade, especially if I'm taking a half size loss. That is my goal, to protect my capital. Okay, so this would have been one of those cases where this would not have worked. Now, one reason for that, though, is that we did have non-farm payroll on this day right here that you're looking at. Okay, so that is a factor. Now, does this mean that we abandon our strategy? Does it mean that it doesn't work? Of course not. There's not any model out there that's going to be 100%. Okay, so this one right here would have lost. Now, let's take a look at the hourly time frame and notice what we're getting. Look at all the sideways action here. So once you have that loss, okay, this loss through here, you get stopped out over here, it's time to once again stand aside. Because instead of this over here, again, we're not just abandoning all hope and saying, oh my gosh, this doesn't work. We're just saying, okay, we took a loss, no big deal. And again, this one back here, this trade that we took, okay, this right here, down here to the low, that alone, that small trade right there, was a 7-hour trade, meaning our reward was 7 times our risk. So think about it like this. How many losses can you take if you have a 7-hour trade? The answer there is roughly 7, right? So if you had a 7-hour winner over here from this area down here to the low, which you did, and then you had a 1-hour loss over here, then you're still 6R plus 6R for the week, meaning the amount you've risked for the week, you have 6x that. Okay, so again, we're not getting emotional the fact that we did lose on this trade up here. Okay, no big deal. We move on. Now, at this point though, what I do if I lose on this on a 15-minute time frame, what I'm doing immediately is looking at the 1-hour time frame because I know I need that higher time frame conviction. If I lose on something and I see sideways action like this, I'm saying, okay, now I need the 1-hour to convince me that this is going to be potentially a top. And what you'll notice here is that on the 1-hour time frame, we have a BOS above the high, and now we have this low over here. Okay, so same exact pattern, right? We have the market mitigating this area back here, but because I took a loss on the 15-minute over here, I'm saying, okay, now on the 1-hour time frame, I need to see something more. I need to see more structure here to convince me that the top is potentially in. And so far, we don't have that. Now, you might be asking, why do I need a 1-hour time frame? What's the difference between a 1-hour or a 15-minute time frame? So think about it like this. A 1-hour on average is going to have 4 times the volume of a 15-minute candle, and volume equals conviction. So think about it like this. If every trade in the market, okay, within these candles equals a vote, then the more votes you have within a candle, the more conviction there is behind it. Okay, so in other words, if you had 2 countries where the population for both countries was 10 million people, and in one country you had 5 million people come out to vote, and the other country you had 1,000 people come out to vote, which result is going to have more conviction? Obviously, the one where you had 50% of the population come out. Okay, so the same rules apply when you're talking about candles. If every trade is a vote, then the more votes you have within a candle, then the more conviction you have with that candle when it closes. Okay, so that is why I need to see now the 1-hour time frame give me something down here, acceptance below this low, to convince me that this is a potential top following the mitigation of this imbalance over here. Now, one thing that you'll notice too is, and this could have cut me out of that half size loss over here, is that this area, we noticed back here on the 15-minute time frame that this area extended all the way up here toward this level. So if we draw this over now, what you'll notice is that the high here, okay, this right here didn't fully mitigate this area based on the 15-minute time frame. However, this high was right off of that 15-minute low. And also the fact that, again, we did have non-farm payroll this week, so that could have been a factor there as well. Okay, but my risk was under control, so no big deal. Okay, so the bottom line here, guys, is that when you get that initial break of structure, change of character on those candles, this is not the time to act down here. We know we have an imbalance up here. This is not the time to act knowing that we want to see mitigation of this. This right here is the time we want to act. Now, moving over here, you can see the exact same thing. We have a break of structure down here below the low. Okay, so this low right here that gave us the change of character, external high up here, we close below. This is not the time to trade. Looking higher, we know that we have this imbalance, meaning that all of this through here, all we're doing is waiting for the market to come back here, meaning that we are not trading any of this. This over here, once we have identified a valid structure, now we are looking to trade. Okay, so having that awareness of when we are standing aside, when we are engaging in the market is going to help you immensely, because this is the #1 reason why your SMC trades are failing. Okay, and without even knowing you or the way that you trade, I can pretty much promise you that after spending time with thousands of traders out there and helping them out with their trading, that usually, a lot of traders know SMC, they know the concepts, they know the terms, they know how to trade it. They might even have a decent model, okay, but they don't have that awareness of when they're supposed to trade and when they are supposed to do nothing. Okay, so instead of saying, I need more discipline, come up with rules, come up with a checklist for yourself when you are trading SMC, and those rules and checklists, that's what's going to give you the discipline. If you have the willpower to follow those things, then that alone is going to give you discipline. Chasing discipline alone is like chasing a ghost. You're never going to achieve it without those rules. So be sure to check out the video right here where I walk you through SMC market structure. Until next time, trade well out there.